Good morning, and thank you for joining us today on our webinar. Today we have a very, very special guest, and our guest today is 𝗁𝗂𝗂𝗁 from 𝗪𝗲𝗀. 𝗪𝗲𝗀 is a spend management tool in the UAE, and they recently had a very large raise, but I'll let 𝗁𝗂𝗂𝗁, I won't take his thunder, I'll let him talk about and make an introduction about 𝗪𝗲𝗀. So today's topic is going to be on tax deduction and spend management for UAE firms. So for most companies, we have a deadline of the 30th of September to do your tax return. I actually know quite a lot of companies who still have not started the process yet. So good luck to you, but at least we can give you some advice on how to make sure you're going through your expenses and ensuring that you're recognizing the right expenses as part of your, or deductions as part of your corporation tax return. Today's webinar is going to be very much about, I'll go through some of the rules in terms of what you can deduct and what you can't deduct, and some of the things you have to keep in mind. We also, we are a tax technology company, and so we've brought 𝗁𝗂𝗂𝗂𝗁 along who can talk about how you can use technology to be able to make this a lot more efficient. And there are plenty of tools, and 𝗪𝗲𝗀 is at the forefront of some of the best tools out there that will help you do that as part of your accounting processes. Just a quick disclaimer, obviously, the advice that we give, you have to get professional advice for your own tax requirements. So for example, we'll give you generic advice, but you need to speak to your tax advisor to ensure that you get your correct specific advice for your circumstances. We will also be doing Q&A at the end, so feel free to put your questions in the comment section in the LinkedIn section on there, and we'll answer them at the end. For those who don't know me, my name is 𝗁𝗂𝗂𝗁. I am the founder of Taxstar. We're a tax technology business. We have an AI-enabled corporation tax software, and we will also be developing additional products over the coming months, which I'm super excited about. We're helping accounting firms automate the tax returns process. 𝗁𝗂𝗂𝗁, do you want to give us a quick introduction about yourself and 𝗪𝗲𝗀𝗀?
Sure, 𝗁𝗂𝗂𝗂𝗁. Hi, everyone. I'm 𝗁𝗂𝗂𝗂𝗁 from 𝗪𝗲𝗀. For those who haven't heard of us, 𝗪𝗲𝗀 is a UAE-based spend management platform. We provide corporate cards to your employees, but more importantly, we capture each and every transaction automatically and handle all the UAE corporate tax compliance for you. So we're used by over 2,000 companies across Middle East. But yeah, instead of explaining more, I would rather prefer giving a live demo of what we do and how 𝗪𝗲𝗀 actually works, which we'll cover towards the end of the session. Over to you, Rehan.
Thanks for that. So what we'll cover is, like I said, we'll cover some of the practical aspects of deductibles versus non-deductibles. You're probably doing a corporation tax return for the first time, and some of these things you need to be aware of, because if you get it wrong, you can fall into penalties. And there's a lot of information points on your tax return that you need to be aware of, that you need to do accurately. And that's some of the things that you need to be aware of. Just a quick introduction of corporation tax. Obviously, there are certain distinctions who is subject to corporation tax. You need to think about, are you a resident person? If you're a resident, you are a UAE incorporated entity. Foreign managed entities in the UAE, and also natural persons with more than $1 million dirhams of turnover are subject to corporation tax. Obviously, we're assuming you've already registered. If you haven't registered and you've gone past your time, you may be subject to penalties, so just make sure you check that as well. Non-resident persons, so foreign entities with a permanent establishment or state-sourced income or immovable property income, are subject to corporation tax, and there's also special cases as well. Now, today's topic is more about your expenses. So for most companies, when they're doing the corporation tax for the first time, what they're doing is they are, they're completing their accounts for last year. They may get it audited. They may not, depending on their circumstance, but that's the starting point of your tax calculation. So your trial balance from your accounting system. What then happens is that goes into your calculation, and there's a number of things you have to take into consideration because what you've reported in your IFRS accounts isn't the end product or the end result of the profit of the tax you'll be paying on the profits, because you have to make adjustments. One of the key concepts in corporation tax is, expenses. Anything that you spend for business purposes should be wholly, exclusively, and exclusively for business purposes. And what does that mean? That means that if there is any ambiguity in that expense, and if it's not for business purposes or it's for personal purposes, you cannot include it in your deductible expenses in your corporation tax return. This is where Alan can come into play, and we'll talk about some of the features, because when you're adding expenses, you can then tag what's deductible, non-deductible, which you can't always do in your accounting system. But we'll touch upon that later on in this webinar. Obviously, capital items which are capital in nature, they're not expenses, right? Because if you're spending money on a laptop and your policy is that you capitalize your laptop, or you spend a lot of money on a renovation or fit outs, then in that situation, you have to be aware that these are not expenses that you would deduct in your P&L. These are capital items that you would then capitalize, and then you depreciate over, a number of years, depending on your depreciation policy for your company. So another thing, you have to make sure that when you're going through your chart of accounts and you're going through your accounts and you're going through the expenses, a common error is what many accountants do is they would recognize a capital item as an expense, and you have to get all of that out before you start your corporation tax return as well. Typical deductible expenses include wages and salaries, office and rent, marketing and advertising, staff training, interest on loans, and business use proportion for mixed expenses. And sometimes you may have expenses where some of it is to do with business and some of it is to do with personal. So for example, you may have a van that you use for your business, but on the weekends you might use it for personal trips as well. And in this situation, you need to be able to distinguish what is the difference, the expense that goes into the van. What's the difference between the personal and the business, and how do you allocate it? And making sure you have systems and processes in place to do that is very important. Other things you need to also take into consideration is, before I go to non-deductibles, is entertainment spend. So many of you may be aware or not aware, but 50% of your client entertainment is tax deductible. Your employee entertainment is fully deductible, so long as it's for business purposes. But client entertainment also includes entertainment for your shareholders as well. So what a lot of businesses don't realize is they may think client entertainment is just the entertainment that you spend for your customers on a dinner or some sort of event. But if you're taking your shareholders to dinner, that's also classified as client entertainment, and that means only 50% of your expense of that entertainment is deductible as well. You also need to keep in mind that, yes, although you are spending money on your business expenses, you also need to keep supporting documentation. So when the VAT rules came in, you needed specific information to be able to deduct the VAT. And a lot of that kind of falls in line with corporation tax. But there may be situations where you don't get a tax invoice because a company is not VAT registered, right? So they might not always send you a specific tax invoice, but you still need to have all of the various information on that invoice to prove that it's for business purposes. Again, Asim will go into what, some of the things that Alan does to help you in that process. Because what we want you to do is, when you're deducting, when you're recognizing some of these deductible expenses, as I mentioned, it should be wholly and exclusively for business purposes, but you also need to have a supporting documentation. Because if you have an audit after 7 years and you don't have the supporting documentation, guess what? You get a penalty for not having the supporting documentation for your corporation tax calculations. And that's where these types of processes are important. It's not just knowing what is deductible or not deductible, it's also following the process to ensure that from an administrative point of view, you are fulfilling the requirements for corporation tax as well.
Very well said, Rehan. The more I talk to accountants or members of finance community, the more I realize that people have the required knowledge. They know that, okay, this is deductible, this is non-deductible. The problem comes more towards, hey, we don't have receipts, we don't have documents. How do I chase people to get receipts? If I have receipts, how do I verify if it is, as you said, it should be billed to the right company, it should have a right TRN number, it should be a tax invoice. And that's where I feel technology is going to help people, and we as finance community members, we have to embrace technology in order to speed our lives, make our lives easy in solving all these smaller problems that eventually become bigger when it comes to audit and tax compliance. So yeah, we'll talk more in detail, but totally agreed on the fact that how technology is going to play a key role in the coming years, especially in our region.
You know, great point, great point. And one of the things that we find is, I'm sure you found this as well, but at Taxstar, we found that we're having to, I have this concept called lazy accountant, right? And we're trying to change our product in such a way where we're adding features where the lazy accountant is stuck. They have to do the things that they need to do to ensure that correct documentation processes are in there. And the other thing that we found with our product, with our customers, is there are accountants who don't embrace change as well. And they see technology as a threat to their jobs, or they just want a 9 to 5 and they don't want this additional headache of implementing a new technology for their kind of, you know, for their processes. But what you're, and I'm going slightly off topic, but the one thing that accountants need to do is, you know, I don't think AI will replace accountants, but accountants need to embrace AI to make them more superhuman, right? To make them have better capabilities that a normal accountant wouldn't have. You know, when I remember when, you know, when I was an accountant in the UK, you know, 15 years ago, everyone had spend management tool. So in the corporates I worked at, we had Concur, right? And we had other apps as well, Expensify as well. And you don't have that, you never had that in UAE until obviously Alan came up. But one of the things that it helped us do is, and I'm sure you cover this, is when we're doing the VAT return, right? We don't need it. The time it took to do the VAT return was a lot shorter because the expense management tools had the reports that we needed to be able to distinguish what is allowable, not allowable. Can we get the attachments? You know, back in those days, you wouldn't attach the documents in the accounting system. Now you do, but then you have it in your app and you have it in within Alan as well. And similarly with corporation tax as well. You need to be able to you need to be able to go through an audit of all of your transactions, right? And look at the supporting documentation. And if you're having to go to every single transaction one by one, click in, click out, click in, click out, it's a nightmare, right? Whereas we use Alan as well, and we're able to just go through some of these transactions quite quickly and have a tick box and say, okay, this is my spend for taxi. Is it got the right information? Yes, great, done. Go to the next one. And it helps that process of auditing your own transactions a lot faster than the traditional methods. And this is where, you know, technology, we as an accountant, we need to embrace technology to help us become more, for me, it's more to become more superhuman. So yeah,
100%.
sorry, I went on a tangent because I'm so passionate about accountants using technology. I'll go over non-deductibles. So, you know, there are a number of things stipulated in the corporation tax law which are non-deductible. So things like, you know, fines and penalties, personal expenses. So a lot of companies are owned by the entrepreneur. And one of the things you have to take into consideration when you're doing your tax return is you have two sections you need to fill in. One is your related party transactions and one is the connected persons transactions. Related party is, you know, any individual company that has, you know, common ownership or a family tie to that ownership. And a connected person is someone who's even closer to your business. So for example, the entrepreneur is a connected person. The entrepreneur's wife or family members are connected persons to that business as well. And what the FTA want is they want a breakdown of a lot of the transactions and how you're going to be able to produce that breakdown, right? You'll have to go to your accounting system and, be able to get that report and upload it into the FTA portal. And it can be a lot of lines that you need to upload, and that data needs to be checked as well. So tools like this will help that. And so personal expenses, if you have a mixture of personal and business expenses, you need to be able to sift it out, because I've come across many businesses where the owner's using a credit card for personal and for business expenses, right? And the credit card statement is not going to make the distinction for you, right? And the bank is not going to do it for you. So you need to be able to have processes and systems in place where you're able to distinguish between the two. So you're not claiming any personal expense that will then bite you later on down the line when you're submitting your tax return. Obviously, dividends are also non-deductible. Capital assets, we mentioned that. There are costs linked to exempt income is not deductible. So for example, there's a concept called participation interest. If you have a participating interest in a investment, that investment is exempt, but also any expenses that are relating to that investment is also exempt as well. So you have to look at, do you have an exempt income? And any expenses related to that exempt income is also exempt as well. We spoke about the related parties and entertainment. Best practices, like I said, you need to keep your records for 7 years. And there are over 200 fields on the FTA form that you've got to fill in. And guess what? If you have an audit, they can ask for supporting documentation for any of those forms that you've filled in. So you need to make sure you have a good tech that helps you have that supporting documentation ready whenever you need. You need to train staff on the expense rules. So one of the key things about when we use the likes of Concur and Expensify back in the day when I was an accountant, was they would come with the expense policy. So staff knew what they could spend, what they couldn't spend, what's deductible, what's not deductible, because you have non-deductibles and deductibles for VAT as well as corporation tax as well. If the accountant is having to do that, that's a lot of pressure on you. So you want to push that as much as you can to frontline employees who are actually making that spend. So you save the time of having to go through all of those transactions and being the person who has to kind of check every single one before you do your submission as well. And at TaxStyle, we have also automated checks on your corporation tax calculation as well. So plug, obviously, we're representing TaxStyle, so I'll just give you a quick reminder of some of our features. So we have an AI-powered corporation tax calculator. We also produce financial statements for IFRS for SMEs. So for example, if you are a qualifying free zone or if your revenue is more than 50 million dirhams, you have to prepare audited financial statements, which your auditor would do. All other companies need to prepare financial statements when they upload their financial statements to the FTA portal. We have a module that produces financial statements for you, which you can use for your company. And we also have document expiry reminders. If your Emirates ID, if your passport copies, your visa copies are expired in your FTA portal and you don't update it within 20 working days, you get a 5,000 dirham penalty. So we give you reminders to ensure that you are, you're prevented from getting those penalties. That's it from my side. Asim, I am super excited to learn more about, well, I know about Al-An, but I'm super excited for people to know about Al-An. So I will, I'll hand the mic over to you. And then, like I said, we'll have Q&A at the end. Happy to hear any questions that anyone has. And we want to help you in your process as well. So Asim, over to you.
Yeah, thank you, Rehan. I would rather start with where you ended on how today people take reactive measures rather than being proactive in especially tax compliance. You get a penalty and then you realize, hey, I need to get something, I need to get my receipts and upload it to a certain place. Rather than being proactive on whenever you do an expense, how you do be proactive of getting everything that's needed from a tax compliance perspective. And that's where Align is helping companies in the Middle East change this narration. So let's start with the dashboard that you're presenting. It's a live dashboard from a real UAE company. And let's look at the VAT input section in this dashboard. You see it says complete and claiming. It shows AED 965. That's the money you can recover from VAT. But at the same time, you look missing documentation, which says AED 2077. This means you're losing over 2,000 dirhams in VAT recovery just because the right documentation is missing. And most companies only discover this during tax season when it's always too late to fix it. And here's what makes this smart. Alan's AI is automatically checking each and every receipt. It looks for TRN number. It verifies the invoice is billed to your company or not. It checks if it's a proper tax invoice format or not. And if any of these are missing, it flags them immediately. So when you see here missing documentation for 2,000 dirhams, it's not just missing receipts. It's missing the right kind of receipts that actually qualify for VAT recovery, right? Let me show you how simply this works. So if we go to the next slide, yeah. So this is a dashboard which accountants see, wherein they get to see each and every transaction that employees have done using Alan card. So in this, you look at Kareem ride, for example. You take a Kareem ride, you tap Alan card, and boom, it's here in the Alan dashboard with tax exempt already applied. You see cash withdrawal, another line item here. Same thing, instantly captured, automatically categorized, and that's it. You're not, no typing is needed, no uploading is needed, no chasing people for receipts. And some of you might still be curious on how are we getting these receipts. And this is where we in Alan make this ridiculously easy. Your employees can send receipts on WhatsApp to Alan. They can forward receipts on email directly to us. Or say you have a pile of 100 receipts. You can just bulk drop all of them into Alan, and our AI connects each receipt to the right expense automatically. So you don't have to chase people for receipts, or you have to match each receipt directly to the right transaction. Our AI in the background does it for you, right?
I'll tell you why this is great, right? Because usually the people who are doing expense management are paying for expenses are sales, right? And usually the people who are having to chase are the accountants. And I know the relationship between sales and accountants, right? They hate each other, usually. So where we can limit the interaction between the accountant and the sales, I think that's where Alan helps as well, because then they will then give you the receipt, and then you don't have to chase them. It will automatically get coded for you without them having to do it as well. So I think in terms of if you're that accountant who likes to be in a corner, don't want to talk to the salespeople, then I think this is perfect for you.
Yeah, and this is what in Alan we say, if you have to change any behavior in any place, there are three things you have to do. One, motivate the people. Two, give them the right ability, give them the right tools. And three, trigger them at right point, right? And these are the three pillars on which we are building this entire way of changing the narration of how you can give receipts easily. We motivate people by showing some leaderboard on okay, how many receipts you have submitted on time. We give them the right tools. You can bulk drop, you can upload on receipt, you can open mobile app and upload, you can just forward an email. And three, we give them the right triggers. As soon as you tap a card, we send notifications on email, we send notification on WhatsApp, we nudge you that hey, you need to send receipt. When you send a receipt which is not correct, our AI would automatically send a comment, hey, this receipt is not relevant, you should go and get the receipt from here. So this is the three pillars on which we are building Alan. Give the right motivation, give the right ability and tools, and provide the right trigger at right time, and this will change the behavior that we want to change, right? Over to the next part, which is tax compliance, right? Look at the tax compliance section in this screen. So if we go to the next screen, this is where the receipts get added. Now back to the accounting dashboard, you see tax compliance section in this. This is the section which is most loved by most of the accountants. You see two warnings here in yellow. Our AI has caught specific issues. Number one, tax amount mismatch. Number two, vendor TRN number in the receipt is not equal to 15 digit. And we stop approval until it's fixed. Compared to these green signals, you have no warning, like for Bolt Taxi, for Grab Taxi that you see. They're all approved, all tax compliant. So our AI is already verifying these receipts with proper TRN number, correct billing, so that your tax decisions are happening during normal expense approval and not at year end when there's an audit at place. Let's also look at some automations that make the life easy. Let's go to the next slide, wherein we'll talk about.
I'll also like to add that you're not just saving. In the first slide we had the amount of the amount of VAT that you're not claiming back because of the poor documentation, but also there's a hidden cost as well, which is if you have an audit, if you don't have the relevant documentation, you get penalties as well for that as well. So that number is actually a lot bigger than what people think, because if you're not providing the right information. Also, what tends to happen with VAT and even corporation tax is if you don't have the large, let's say you have an invoice and it's for a large amount and you're not able to get the documentation and you need to file your tax return, you then have to do a voluntary disclosure, and depending on how big that is, you have to pay a penalty for voluntary disclosures as well. And so again, it's all about getting the information it's all about recording the information as soon as that transaction is made, rather than waiting to the end of the month, rather than waiting till the end of the quarter when you do your filing, because accountants obviously are busy people. They're handling a lot of important things. They're handling money and reports, but typically accountants will do the checking at the end of the month or the quarter. But imagine if you had an AI assistant that's checking everything for you without you having to even do it, right? And you having to get another headcount to do it for you. And that's the beauty of, these checks that you've mentioned.
Yep. And it's not like accountant or the finance team member does not want to do it. There are so many expenses. There are like thousands of expenses happening in a month that it gets really difficult for them to do it. You can't hire 20 accountants just to look at these things. And that's where we call it human AI collaboration has to come up, right?
Yeah.
You have AI as an enabler, but you need to have a human at the forefront reviewing what AI is suggesting and making the decisions accordingly. Right?
Yeah.
So this human AI collaboration is what has to come in the coming years, in order to change, in order to ensure people, we as accountants, our time is saved, our life is saved, and we are able to solve and close our books on time. Cool. Let's talk more about automation. The screen that you see in the front is from Alan, wherein if you want to create certain automation rules, you can create that on our Alan platform. Specifically talking about merchant rules, since that's what we are presenting here. Look at these merchant rules. Taxis, which says 395 expenses, are automatically assigned to tax exempt as a tax code. Then there is SaaS software with 283 expenses. They get automatically assigned to reverse charge on service treatment. And you also have specific rules for specific merchants. For say LinkedIn or Meta ads, they're automatically mapped to advertising or marketing GL account or expense category. And the tax code reverse charge also remains. So the beauty of this is you set these rules once, and they are always available for you to review, right? You set these up once and the system is applying all the correct UAE tax treatment automatically. And remember, each of these has already been verified by our AI to have proper documentation. So you have proper documentation, you have proper categorization, and everything is ready to move in directly into your accounting software. So when you export from here, so your Alan is already integrated with your accounting software. So when you export everything from Alan into your accounting software, your tax codes are already assigned, your supporting documents are already there, Your supporting documents are all verified by AI, and your accountant is now getting UAE compliant data and ready for corporate tax filing. So, and not just categories or GL accounts, but properly documented categories that will pass FTA audit. Before Alan, you have to have year-end tax categorization panic. And with Alan, you have monthly validated tax-ready data with all the AI verified documentation at place. So yeah, this is what we have been working on in order to use tech and AI to in order to reduce time spent on categorization. So what you have just seen is not an expense management platform. It's a UAE corporate tax compliance, which is happening automatically. We started with 2000 dirhams that would normally be discovered during tax season, right? But here you see it immediately with specific reasons on why it can't be claimed. Your employees tab cards or AI verifies receipts, whether they're property or a number, whether they're tax compliance. And during these normal workflows, everything is reviewed. And the result, your corporate tax filing happens automatically without your existing accounting software needing to do all your manual work one by one. Everything is all automated. And when FTA shows up for audit, you just hand them a folder of AI verified documentation instead of scrambling through your shoe boxes of receipts. Yeah, that's about Alan. I would love to answer any questions that you have, anything specific around how we help save time for taxation and overall bookkeeping.
Thanks for that, for your presentation and demo on Alan. I think it's really important in the sense that, again, we're trying to make that process of cleaning up data and reviewing as proactive and as easy as possible, to help the accountant to save time. I think I've been a bit harsh on them where I've said that some of them are lazy, and I guess you're saying they do want to do it, but they just don't have the time because they've got so much data. So yeah, no. Apologies for calling some accountants lazy, but yeah. We've got the first question, bit of a technical one. It's from Olga. Hello, our company is a premium car rental service, and our staff often deliver vehicles to clients and collect them from various locations. We are connected to the Alan expense management system. They're an Alan customer, way. In such cases, employees use taxis, and we always have receipts for these taxis, right? Can taxi expenses incurred for delivering and collecting vehicles be treated as tax deductible business expenses for corporation tax purposes? I mean, look, this is pretty straightforward in the sense that it goes back to is this expense wholly and exclusively for business purposes, right? So if you are if your business is, if you're premium car rental and you're delivering the car to your customer, and the driver's taking that taxi back to the office or doing something that's business related, then my view is it would be tax deductible. However, if they're delivering the car to their customer and then they're taking a taxi back home, for me that's more personal. So I think you need to analyze what you probably want to do is analyze where they're going to and fro. If it's business to business, then it's a normal course of business, and therefore for me it would be more tax deductible. But if there is some ambiguities, maybe the driver is going for lunch afterwards, or maybe the driver is going home, or maybe he's coming home to pick up a car, then I think that's going to be it's something that is not wholly for business purposes, right? So you need to be what I would suggest Olga do is you probably want to analyze what are these trips. In Alan, you can mark where they're going to and from, right? And use that as an analytical tool to discuss to then decide which of these taxi rides are allowable and disallowable from a corporation tax point of view. So 𝗁𝗵𝗶𝗀, he answered the question. Thank you, 𝗁𝗵𝗶𝗀. He read my mind. So yeah, thank you for that. But yeah, what I would add to that is, like I said, in Alan, you can put the destination to and fro for the taxis. Asim?
Sorry, Rehan, come again.
When you're doing a taxi ride, can you put where the destination is going to and from?
Yes, you can have these things, or so from the receipt we'll automatically fetch whether where you're going from and where you're going to, and you can in fact even set rules that are relevant in this scenario. For example, if I take, let's say you're taking taxis from Careem or other software that's relevant there, we can automatically map it to the relevant tax code. We can automatically map it to the relevant GL account, so that as an accountant, you don't have to look at all these taxi rights one by one. Everything can be reviewed automatically.
Yeah. So look, I mean, we're coming to a point where, a lot of people do know about corporation tax. It's all about how can we find the best ways to make this whole process efficient so you can do your calculation as quickly as possible. And in this scenario, you would want to use technology like Alan, where you want to analyze where those trips are to and from, to then decide whether they're deductible or not. But that also falls as part of your accounting policy as well, your expense policy as well. If you have drivers who are going home after delivering a car, is it allowable as part of your expense policy? So you probably want to have a look at that and just make sure that it's in line, whatever they're doing is in line with the expense policy. So I know I've gone above and beyond answering that question, but I just felt that would be a good way to think about it. So yeah. Any more questions? We've got 42 people online, so feel free to ask any questions. Doesn't have to be about corporation tax. You can ask a question about me. You can ask a question to Asim. What are the future plans for Al-An? Your company went on a trip recently, right, to Thailand?
Yeah, that's correct.
How was that trip? That might entice, maybe we can talk about that. I don't know if you're allowed to, I don't know, but yeah. So yeah. Any future plans for the product that you can talk about?
Definitely. Since the session is around taxation, I'll talk more about one of the very dear features of mine that I'm working on, which is VAT agent. Think of it like I spoke about human AI collaboration a few minutes ago, and that's exactly what we are building. Today, you have to create rules in Alan, wherein you have to tell, okay, if this happens, okay, then apply this certain tax code. If ABC happens, but it's not as simple as it sounded, right? There's a lot of objectivity in deciding, okay, whether it is billed to the right person, whether it's billed to the right company, whether it has the TRN number, and so many other nuances to it. So what we are building is an AI agent which is trained on tons of expenses which people have done with Alan. It is trained on tax treatment for each of every expense. So now what we are launching is an AI agent which will automatically suggest, hey, I think you have applied 5% tax code here, but that's wrong. You should apply 0% because you cannot claim it for so and so reasons. Mr. Fahad in the chat has given a very well description of why this is claimable, along with Article 28 of UAE Corporate Tax law, right? This brings trust. There's a reason, okay, why it is claimable, why it is not claimable. And this is exact communication engine we are building in Alan, wherein for each expense we'll tell, hey, I think this is not claimable because A, B, and C. I think this is claimable and 5% because A, B, and C. So you'll see this live very soon. We are reaching out to a few beta testers also. We are collaborating with few agencies to review answers of our AI agent. And yeah, we'll launch it soon.
Sounds like a really exciting feature that's going to help make accountants their lives a lot easy, save them time. So yeah, super excited for that to come out as well. So you heard it first, guys. You heard it first from Asim. Okay, I don't think there's any more questions at the moment. We've got 41. We still have 41 viewers on our webinar. So I think we'll wrap it up. Any final closing thoughts from your side, Asim?
No, I'll just summarize 3 things that we covered. One, we as accountant community, we need to embrace technology, and that's super important. Number two, human AI collaboration is the way forward. You cannot just trust on AI, and you cannot just continue doing the manual work all by yourself. Human AI collaboration is the way to go. And number three, AI is the best software out there in the UAE market. So go check it out and make your lives easy.
Cool. No, thank you for that. Feel free to reach out to Asim or myself offline if you have any questions. Thank you very much for joining us. This has been recorded on LinkedIn Live, so it will be available on LinkedIn if you want to review it again later on down the line. We'll also post this on YouTube. And thank you very much for joining us. Good luck in your tax return. Take care, everyone.
Okay, thank you, everyone. Thank you, Rehan, for organizing this.
Bye.
Thank you. Bye.